Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Let's jump right in. So HBI, cleantech startup focusing on industrial waste, raised 15 million in a round led by CDP VC through its Green Transition Fund. So interesting news. As we all know, CDP has been like one of the biggest players in Italy relating to VC. It is interesting to see exactly how they're evolving, especially regarding sustainable technologies. So a lot of sustainable funds have been under the attention. In particular, this one backed by CDP and by actually a European initiative called Next Generation, which essentially allocates funds to institutions that are willing to invest directly or indirectly in green tech companies, early stage and maybe later stage. So very interesting deal. My understanding is that the Green Transition Fund is basically an allocation, a target deployment of 250 million euro. They only have 3 companies in portfolio right now. One is Energy Dome, the other one is Days, and then HBI. So moving forward, not the fastest pace, I would say. Probably is very difficult to allocate in that space because it's extremely technical, given the other 2 deals like Energy Dome, basically working on alternative energy sources, and Days working on battery technology and how you can deploy it like all over. And also HBI, of course, basically managing sewer waste in a much more efficient way. So definitely an interesting angle, definitely like one of the biggest fund in the 13 funds in the CDP family for venture capital. So interesting deal, I would say. What is your take on this one?
Yeah, I agree with you. Starting from the fund, and its twin fund, the Digital Transition Funds, altogether, I think they are worth a few hundred million euros. They come from this allocation with the next generation EU, that's basically allocating it for the National Recovery and Resilience Plan. And there are a lot of capital that must be deployed quite quickly, so in just a couple of years. So they are, quick capital for the 2 main verticals. So green transition, that's very broad scope, as you correctly said, and the digital transition that touches anything that's software. And basically they just started investing, so we only see now a few startups in their respective portfolios, and in the green transition one, I have to say that Days and Energy Dome are quite relevant. I like them quite a lot, so I think they're nice deals. I didn't know, I know nothing about HBI, but the round is sizable, and the problem is for sure quite important in Italy in particular. So interesting tools seems, for raising capital here and now.
Yeah, I mean, let's talk about HBI quickly, and then let's talk about the tools for sure. So in terms of HBI, what I was curious about is actually what they're doing. So basically they address the problem of sewer sludge, which essentially is like the byproduct of water purification. And typically that has been basically treated as waste, so burned in incinerators, and kind of sound like a problem that was solved and, doesn't really need any more addressing. And what is interesting is that these guys are actually changing the paradigm in a way that part of it can be actually reutilized in a much more efficient way, and minimizing actually anything that is left over. So it's an interesting play. I'm curious about how, taking kind of problems that are thought to be solved, and then kind of, this thing has been again, like retaken and seen from a different perspective. So definitely an interesting way to see these kind of things. Let's talk about the tools that you were mentioning, Nick.
Yeah, I mean, I'm taking a look from the website directly. The allocation for the Green Transition Fund is 250 million euros, and the digital transition one is 300 million, so more than half a billion euros to be deployed in a couple of years. And the strategy seems to be to allocate capital as much as possible in bigger rounds, in later rounds, so starting from 1 million up to um, 15 in case of the green transition. And I was taking a look here. I'm not seeing the size for the digital transition, but I think I expect it to be quite similar in some sense. Um,
Yeah, the other interesting probably element is that the fund is going to invest direct and indirectly, which probably what we're going to expect maybe in the future is also some investment in entities that themselves invest in companies. So probably the fund is going to have like a very diversified portfolio in terms of tools. So that's also a very not so typical angle. So it's broader than a traditional VC firm, I would say.
Yeah, also because of the source of the funds. So they're basically funds that are in the big scope of the resilience and recovery funds. So that means not only grow but also recover and restart economy. Even though the strategy in this case is really to sustain and support startups and funds. So both as you said, both direct and indirect investments.
Yeah.
That's probably also the only way to deploy so much capital in so little time, with the also um, the obligation to co-invest, so to also move private capital together with the public capital. So if you have so little time, you really need to move other resources along yours.
Awesome. Right, moving forward, let's talk about Atlas SGR. So it's not always the case that we see a lot of SGR being born in Italy each year, so it's worth mentioning what is happening in that space. So Atlas SGR announced the first closing of Atlas PMI Destinazione Futuro, which is 100 million, and Atlas AI Fund 1, which has like a target of 50 million. So two very different funds with different allocation and radically different strategies. So maybe let's talk a little bit about the two different funds, Nick.
Yeah, I didn't know anything about Atlas. I was not aware of them, but I read the news last week, and as you said, they're two small funds for now. They announced that the first closings, even though the target closing are quite sizable, like 100 million each, more or less. But still, they announced the first closing at 10 million for one and 15 for the other, out of memory. And the strategy, as you said, the two strategies are interesting. So the one of the two funds will only invest in loans, at least partially warranted under the warranty of the Confidi. That's basically how would you define it, Jack?
It's a guarantor from. Yeah, it's like it's an institution that basically how to put it, like I don't want to say like insures, or it's a kind of it's not, I mean, let's say it gives like the seal of approval about the quality of certain kind of operation those kind, I would say.
Yeah, look, Wikipedia to the help. So Confidi is an
that's
acronym.
Wikipedia, I think.
Yeah,
okay.
It's a consortium of collective warranties of loans, basically. It provides warranties to help enterprises get access to sources of finance um, in the economic and productive sectors. So basically, it is a consortium operating as a warranty provider for
Yeah.
companies raising capital, not equity capital, but financing capital, so loans or bonds, stuff like that. And Atlas, coming back to Atlas, they launched this fund that will provide loans to startups related to or coming from selected equity crowdfunding platforms that are eligible for this warranty.
Interesting.
That's an interesting play. Hmm? So because at least part of the
So
risk of
essentially,
the
the platform is kind of the filter, and then if they kind of pass the filter, then it's kind of it's a debt instrument essentially. They work on like a debt instrument essentially. Yeah,
yeah,
interesting.
essentially,
Not pretty
essentially.
unique. Pretty unique. Yeah, yeah,
Yeah. So basically, if you want to be, or if you need to, or want to be evaluated, considered by this fund, so the PMI Destinazione Futuro one, you need to be introduced by a selected partner, Confidi or selected crowdfunding platforms. I'm reading from the press release.
yeah.
Up to 500,000, and at least 50% guaranteed by Confidi.
Awesome.
Interesting. And the other
Interesting play.
funds,
Definitely an interesting
yeah,
play. Yeah.
yeah. The other fund, which I'm correcting myself, the VB fund one, has a target of 50 million and announced the first closing at 10 million. They will invest equity capital in startups launched or coming out from venture builders and venture studios. Interesting, right?
Yeah, pretty unique. That's pretty unique. I don't think I've seen like anything which basically as a VC they sort of they prefer investment strictly from venture builder or studio. We've seen models where on top of a builder or on top of a studio there is a financial entity investing in their company. So that kind of it's called a dual model where the holding company invests in the product of the builder of a studio. Very great examples, also in Italy for sure. But a fund doing that at scale, that's pretty unique, I would say. And what is interesting is that they are touching builders and venture studio all across Europe. And I think there is a couple from the US as well. So there is a selection process, basically through the venture builder and studios, and then the allocation of capital will depend on what exactly the companies are going to perform. So interesting take.
Of course. Yeah, from the press release again, from Germany, Merantix, from Italy, Full Farm, from the UK, Post Urban Ventures, from the Netherlands, Slimmer AI, and from the US, Nobody Studios. In a
Yeah, there you
sense,
go.
this shouldn't surprise me in particular too much, because for quite some time now, a couple of years at least, I believe, there was this presentation going around with statistics around startups coming out from venture studios against the broader market of startups that raise capital.
Yeah,
I don't know whether you saw it. Well, the statistics of
I don't think so. Yeah.
how many startups per batch getting to Series A and the exit time and valuation of the startups coming out from venture studios were extremely higher than the broader market of startups that raised at least a seed. So it was more or less this type of analysis, and the numbers were quite different. So from if you believe that report, it does make sense to launch a fund that only invests in startups coming out from venture studios because the economics, so the conversion rates, let me call them this way, from seed to Series A are
Yeah.
way higher. So
Wow, interesting. Very good. So, which in a way kind of takes the angle of a few funds that have been on the market for a while, which is essentially, funds that do decide to invest only in the top tier batches in top tier accelerator, for example. Just to give a parallel, I know of funds that they only invest in at least a couple, if not more, that only invest in YC Combinator companies, and that's it. So unless, so basically it's kind of used as, and I think with YC, I think you have even better metrics when it comes to conversion to Series A and to getting to IPO, reaching unicorn status and everything. So that's pretty interesting. But it's kind of on the same model. So you have like sort of a strong filtering mechanism, being it the YC brand or being it the venture studio sort of successful companies, and then you take them from there. So another interesting model that actually has a great potential to work out actually.
Yeah, so I agree.
Awesome.
No, let's see, because at the end of the day, YC is the only real startup accelerator with enough history and the volume to create this type of statistic, and it's still extremely biased towards a few great successes.
Indeed.
I don't know, interesting.
Very cool.
Nice.
Right, let's talk about yes, definitely to keep an eye and see how it's going to evolve. Yeah. All right, moving on. Let's talk about some acquisitions. Contents announced the acquisition of 4W Marketplace. So Contents has been like a very successful case in Italy, led by the CEO Massimiliano Squillace. It's a SaaS platform which is supported by generative artificial intelligence for content creation and orchestration. So they've been evolving the product quite a while, especially with the new wave of AI. They are basically one of the top provider, maybe probably in Europe, of this kind of software as a service. So shout out to the company first of all, and then great when it comes to actually hearing about how foreign companies are integrated in the business plan essentially to bring like new functionalities. So 4W, my understanding is that they specialize in marketing automation in general, and they're taking a very niche and narrow approach. So they really focus on marketing automation for certain industries, such as, for example, real estate, automotive dealership, retail. So very, very specific use case. So yeah, great news and interesting sort of growth by acquisition strategy, and also tapping into international markets. So 4W, I think now is rebranded as AdHub. It's not an Italian company, and that definitely allows a broader spectrum of client across Europe. So awesome job for sure.
Yeah, they've been quite acquisitive in the last couple of years. I think they acquired at least 5 companies, and 2 were announced in the last few weeks. So they're very aggressive. That's interesting. So it's unusual for an Italian company in the tech space to be this aggressive, unless you are a private equity platform. In that case, it's normal. But this is an exception. Or you are bending spoon, but that's another story.
Exactly. I was about to say that. Exactly. Or you're both. Yeah.
Exactly. But otherwise, it is more unusual. So it's interesting to see this strategy being playing out by an Italian company.
Yeah, what I'm feeling though is it's kind of a level of maturity when it comes to growth by acquisition. It's a good sign, at least. I don't know what you think, but it feels that there is some sophistication happening, and some of the more successful or quick or bigger companies are trying to leverage that, and it's happening every year. It feels like it's more and more every year, really.
Yeah, I agree. It's not easy to acquire a company. Thinking of acquiring 5 in a couple of years, another level.
Awesome. So other companies that are more maybe acquisition is more in their nature. Let's talk about Mondadori acquiring a controlling stake in Waimea, with the goal of building one of the biggest social media operator in the food and cooking space. So Mondadori Media is a branch of Mondadori Group. Basically, they've been very sensitive to anything digital. It's an interesting play. Waimea is basically the company of one of the most famous food influencer in Italy. And basically what they've been doing is giving us actually a few interesting elements when it comes to this kind of acquisition, especially basically they're looking for views, they're looking for audience in general. So the stake is about 6.9 million, which is buys the majority of the company. So the company was valued at 13 million, which is a 4x EBITDA. So interesting to see how exactly some corporations are thinking about these kind of digital deals. So the EBITDA was of Waimea was about 2.7, and roughly the valuation, the enterprise value, declared by a few articles, was 13, which puts it in 4+X EBITDA number. So that's pretty interesting as a metric, I would say. But yeah, interesting to put a step into the food social media for the next generation. So they've been working with Giallo Zafferano, Zenzero, and they apparently have a very strong merger and acquisition plan. So that's something.
Yeah, that's interesting. So what this is not really a startup news, because neither Mondadori nor Waimea, I think, can be considered startups. At the end of the day, Waimea is the company wrapping a social media influencer in the food sector with millions of followers for sure. But still, it is relevant because of the ambition, I think, in particular.
I agree.
So Mondadori is squarely aiming at building a powerhouse at the global level in the food and cooking space. And considering the relevance of the Italian cuisine, that's something that can be marketed
powerful
across the world.
Yeah, another element which I thought was very interesting is the tools that they're using. So they're really thinking in terms of, VC investment plus an M&A add-on, if you would say. So they acquire 51% controlling stake, but they also have a structure of put and calls option that actually they can get up to, I believe, is 70% of the company. So this is not uncommon. So, it's always interesting to highlight that, just because, especially for founders looking for an exit, which is not IPO for sure, that's one way that corporations are currently repeatedly working with digital companies and startup in general. So it's really a minority stake, then majority stake, then full acquisition through a path for acquisition. So it's happening and will happen more and more as corporations also get more sophisticated on that.
Yeah, I agree with you. So it is becoming quite standard to have some kind of earn-out agreements in some form or the other, and it's a classical play. So you start by acquiring a stake, and then you have a put and call mechanism to manage the price of the following stakes. So it makes sense, you spread the risk of the operation. If things go very well, you can buy at a specific price. If things go south, how bad it can go with the put. So it's the safest way to approach to this type of operations for both parties in a sense.
Awesome. Nick, thank you so much. This concludes this week's episode of The Week in Italian Startup. Please subscribe to the channel and to Nick's newsletter. And thank you for joining us today. And until next time.
Thank you, Jack. It was a pleasure as always. And ciao, everybody. Have a great week.